Friday, 14 August 2026. 3 Asia-Pacific AI stories before your first coffee. Beijing's AI companion regulations took effect on 15 July 2026, imposing 2-hour dependency reminders, mandatory safety assessments at launch, and again at 1 million registered users, and an outright ban on virtual intimate relationships with minors. The rules were jointly issued on 10 April by the Cyberspace Administration of China, the NDRC, MIIT, the Ministry of Public Security, and the market regulator, making them the most cross-agency AI behavioral framework China has produced to date. For scale, Talkie alone reported 23.5 million monthly users last December, with average daily session times above 70 minutes. Why it matters? The rules carry no explicit extraterritorial clause, but they function as a design template that regulators across Southeast Asia, Japan, and South Korea will almost certainly reference when drafting their own companion AI guardrails. Builders shipping social AI products into China now face a hard compliance gate at 100,000 monthly active users, which means early traction triggers regulatory filing rather than later scale. Platforms already live, including Minimax's Talkie and Baidu's companion features, must retrofit dependency detection and parental consent flows for users under 14. Capital allocators should watch whether these thresholds push startups to cap growth deliberately or restructure user onboarding to delay crossing the filing line, a dynamic that could reshape unit economics for every AI companion play targeting the China market. So Tencent's AI compute bill hit RMB 52.8 billion in the June quarter, up 176% year-on-year, dragging the company's free cash flow to negative RMB 13.8 billion. Revenue rose 11% to RMB 204.8 billion, but capital expenditure payments of RMB 59.3 billion overwhelmed operating cash generation. The spending surge coincides with the July launch of Hunyuan 3, which Tencent says now ranks in the global top 3 by token consumption. Why it matters? Tencent is the first major Chinese platform to tip into negative free cash flow purely on AI infrastructure spend, and it will not be the last. Goldman Sachs estimates the 4 largest Chinese platforms will collectively spend roughly $102 billion on AI capex in 2026, still dwarfed by American hyperscalers at $764 billion, a gap of about 8 to 1. Capital allocators watching Asia tech earnings should track adjusted free cash flow, which strips out compute prepayments and came in at a positive RMB 37.6 billion, as the real signal of underlying business health. The second order effect, if Tencent keeps burning cash at this rate, smaller Chinese AI labs relying on Tencent Cloud for subsidized influence will face pricing pressure sooner than the market expects. Now, Tokyo SoftBank has drawn down a $10 billion margin loan backed by its OpenAI shares, arranged this month with 5 lenders, including Mizuho Securities USA and Sumitomo Mitsui Banking Corp. The 2-year facility sits on top of a $40 billion bridge loan raised for the same investment, bringing SoftBank's total committed capital to more than $60 billion for roughly 13% of OpenAI, with about $55 billion already paid. Proceeds flow to general corporate purposes across the group and Division Fund 2.2. Why it matters? SoftBank is converting a private American AI valuation into a concrete Tokyo balance sheet obligation at a scale that makes its lenders, its shareholders, and Japan's financial supervisors co-passengers on OpenAI's trajectory. The 5-bank syndicate now carries direct exposure to a single private company's mark, and any material write-down would ripple through Japanese megabank rigs. Capital allocators should watch the collateral coverage ratio. If OpenAI's next valuation round compresses or stalls, margin call mechanics could force SoftBank to post additional assets or liquidate other holdings. The second order effect worth tracking is whether this structure encourages other Asia conglomerates to level up against private AI state, turning venture-style risk into bank-grade credit exposure across the region. That is your AIinAsia briefing for today. Stay sharp, build well, see you tomorrow.